has begun. Cue the fire. We have this little guy right here, Jim Cramer. He's telling you to buy. And then on the other side, Michael Burry. He's on my other side. You're like, that's not Michael. That is clearly Michael Burry. He is telling you to sell. And Johnny Bravo, what he say? He's actually telling you to buy, which is a little frightening being on the same side as my little Jimmy here. That little scary. Skylar, if you could do me a big favor and bring down that cool little screen, because we have some good things. Thanks, Skylar, to show the people. There we go. Hits it and quits it. This is going to knock your shoes off, your pants off, and if you're an older gentleman sitting in the White House, your diaper. And coming in from this guy, he's saying, got some bad news for you. Also, you kind of, cut yourself there shaving there. That is a terrible picture. I can even see your nose hairs. Golly gee. Woo, the joys of getting older when hair grows in places that you would have never expected. Powell says Fed discussing a couple more rate hikes, yet the bond market is saying you're an idiot. And I will show you what this dude is doing in the charts, going back, because you can go back and see, well, what happens after the Fed does everything the Fed does? Oh, the market goes up, but then it crashes. But I got to show you. This is crazy. You see, you have to understand that the damage is gonna come later. And for those of you that, because I'm long on SPY. I've been long on SPY ever since it broke that little triangle that I taught you where to put in a buy. I actually closed it this afternoon, taking about a 2% profit, and then re-entered right back in. Markets go up. As you know, I always have a exit prior to earnings or exit prior to Jerome. But coming in from Market Watch, Fed lifts interest rates by a 0.25 percentage point and signals ongoing increases. Okay, you go ahead. As the bond market is going the complete opposite direction. Well, that would be yields. Bond prices go up and you can make money going up. Also, please do not correlate Fed with stock market, okay? Don't correlate economy with stock market. None of that. Just erase everything that they taught you, that they programmed you in college and in high school, and don't fight the Fed and blah, 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 as if they control interest rates where they actually don't, and I can prove it to you, and you cannot if you think they do. Big Short legend, which legend in my book, Michael Burry issues a grave warning to investors with one word, which you probably heard about yesterday: sell. And since I respected what he said yesterday, I did exactly what he said: sell. Sold the wife and kids, so I am a free man. And at the same time that Michael is telling you to sell the kids, keep the dog, Jimmy is telling you we're in a bull market. Now, this is frightening, okay? Just to let you know, always do opposite of Cramer, okay? We are in a bull market. He said that the last time that we entered into the worst bear market. Actually, this guy has been so wrong so often, it's just probably best to follow the ETF that's like opposite Jim Cramer. You'll probably do pretty darn good in the market. Also, if you go back in history, you know, and I've been preaching this, even though this is kind of macro, not so much charts, a little bit of charts, a little bit of macro, that what's going to happen is the market's going to go up. And Jim Cramer and all the retail crowd is going to push the market higher because Fed's going to pivot. Fed pivots. And then it's after that the market crashes by 60%. But that is not the chart that I wanted to show you, because I've showed that to you before. Because please subscribe to this channel so you can keep up to date on where we at and where are we going to go. I mean, unless you don't have anything in the stock market, it's all right. You probably don't need to subscribe. Maybe you should consider making a little bit of money, paper trading, not financial advice on this channel in this market. But looking at these two lines, I got a blue one up there for you, and I have a white one. And I will go ahead and get rid of the other white one to draw away from the white one because it did not need to be there. That was a 200-day moving average. What you are seeing right now is the bond market yield, okay? This is the yield on the bond market, and this is the inversion. You take the 2 and the 3. The 2 is actually the 2-year yield, okay? The 2-year yield is exactly what Jerome follows, okay? He doesn't control it. He just follows it. It makes you look as if you're in control. And as they did right now, they're like, oh, we're raising rates. 0.5 point, 5 points, 12 points. All the red above my head, those are the yields coming down. On the 10-year, just crashed today, 3%. Wait, I thought the Fed has levers and switches. No, they don't. That would be the bond market that controls the yields. And the Fed and 400 PhDs go, this is a really good idea to make people think we're in control. 30-year down 2.5. We got the 3-month, 1 year. Everything is down. And not just down, it's inverted. That red line that you see over there, which it probably might even be 6.7 or 4.75. It's going the wrong way. This red line over here on the short end, the 3-month should be down here. Okay. The long should be up here, but it's backwards. It's called inverted. And every time that inverts, you have what's called a stock market crash. That would be on this side. This is SPX. But I just wanted to use that chart over there so you can understand. If you were to loan me $1 million over 30 years, assuming you would think, I want to get a lot of money from that. If I have to give you my money for 30 years, I want you to give me 30% on that. Okay, how about 3 months? Oh, I don't, whatever, a couple percent. It's backwards. It's opposite day. That's because the bond market is telling you that we have horrific times ahead, and it's already front running it because it knows, just like it does 100% of the time. And looking at this blue line, when I do the two together, the 2 and the 3, it is the most horrific inversion, well, since the last time it was inverted, or the last time before that, or the one before that. The one was the year 2000. Remember when the stock market crashed? The next one was 2007. Remember what happened after that? The market crashed. The one that just happened, market crashed. Market's not yet crashed. And if you're like, but Bravo, where's the stock market in all this? This is just a blue line. This is what you do. You click the plus button. You click the SPX right there, same as scale. Okay, then you can click away, and then you can see the correlation between an inversion and what happens to the stock market. Oh, and this one going back to the year 2000 right here, the S&P 500 wasn't hit nearly as hard. If I were to overlay the NASDAQ, so for those of you that are like, go long NASDAQ, you're going to have your shorts handed to you from right about there, we'll measure there, to bottom. You have about a 46%, your money gone. And actually in the year 2000, you had 2 of them, right? When we got into these levels, and then it's like, okay, you're okay. And then we got back down there, you were warned. It was like, well, I've lost 20%. How about let's do this again? Also, you have a market that goes up. Do you see? It inverted. That's where we are currently at. We're at these levels right here. Market still went up. But then shortly after, I mean, maybe not shortly after, it would be October. And this was actually, this was March. So you have to wait. It takes time. March, April, May, June, July, August, September, October, 8 months. So we could have a sweet little rally for the next X amount of months. And then you get to lose 53% of all of your money. But remember, kids, buy and hold. It's always better. Time in the market better than timing the market. Well, except for people that went through just about any market cycle, you could be waiting 30 years. I just don't want you waiting 30 years. And if we move it over here to today, here we are again. We had, you see, market still goes up. Oh, we don't have to worry about that inversion. That's stupid. Market tanks, what was it on that one? 21%. Okay. And this one, okay, you see where we're at? Right there. We are at the lowest since forever. So do not be surprised if market goes up, but you wait, because there is going to be pain to be paid. But that does not mean that you are not in it. You need to be in it. Just like right there, $3.99. That is where I put in a buy at SPY. I'm still riding it. I closed this morning, then I reopened it for a profit, still profit. I also have a Bravo's daily watch list if you want to come along. This would be in my bull market because we are currently in a bull market on SPY, and I'm up about 3%. Usually when I talk about it on the channel, I have to remember and go, okay, I got to show you, what are we doing? I think the next one was UNG. We've all been waiting for on this one. This is going to be a great swing trade. And some of you guys actually front run this, and you're like, nope, I'm going to do it because this is amazing. And you just keep on losing. Right now, down even another 9% today. Stop it. And all you have to do is turn on my one indicator, that one right there that happens to be missing my other indicator. And that would be my Bravo 9. You just click that button right there. And if you want, you can turn on your little buy, when to buy, when to sell. I'll just leave the buy on right now. You're going to notice it's not on, okay? This blue line needs to get above the red line. So stop being dumb. And also some of you guys decided to be real dumb and go long on Boyle. I never even told you to do that. It's currently down almost 20% today. This is intraday. You got to wait till that blue gets above the red, and then you can come in. Also, on the rate that the Fed follows with their overnight lending here, that would be the 2-year, spot on. And again, they are so behind the curve again on this. It was almost up to 5%. See, way up here. This was, you want to know what month that was? That was November, okay? After November, that's it. That's as high as it's going to go. The bond market is even telling the Fed, dude, you got some chasing to do again. And if you have Lux Algo, it told you exactly what rates would do today. Well, the real ones, the ones that the entire world plays with, it's going lower. You had what's called, that is an ascending wedge. If you want Lux Algo, link in the description. It turns on these little things for you. Or you could just take my swing trade course at 70% off, take my bear market course at 70% off, because we are currently in a lot of the market, we're in a bear market. In some of the market, we're in a bull market. You need to know how to trade both. And soon, we're going to be in a very, very bad bear market, like really bad. But look at this. This is what happens. 80% of the way through the apex right there. And what's it do? It breaks that line and goodbye. So even though the Fed is raising rates, it's okay. It's not going to, well, it doesn't affect you. The 10-year yield, that you pay on your credit card, your cars, it's been coming down. Oh, hey, look. See another ascending triangle? And it broke. Guys, please take this would be my bear market course. This is where I go into these kind of things. My swing trade is very simple. You swing it, you go up, you take your profit, you get out. But I think you need both. But looking at this, I mean, we've come from all the way up there to all the way down there. That means your auto payments are lower. That means you want to go refinance. You want to go buy a new house. This is what the market is all about. It's all about the bond market and the yields. The Fed and their 400 PhDs just like to call themselves God and like, we have control over the bond market. No, you don't. And also, just to let you know, as fast as the Fed, right, was behind the curve the first time, like, okay, we'll hurry up and raise rates. And then rates are already like down. They're going to have to pivot down again so quickly, which is great for you, right? Also, that would not be a Lux Algo over there. I see a flag. Hey, let's see if it hit price target. Do you see that? Perfect. Would you not agree that this flag, with flag pull, flag, right? You measure, oh, hits price target. Guys, I'm telling you, once you learn this stuff, just makes life so much easier. Like here, I'll show you how to measure this break right about there, right there. Okay, you see that? When it comes out of that little apex, it actually has lower to go. There you go, price target. When a month from now, I'm going to come back and go like, what is that? Why do I have just a 7 up on the screen? Oh, Jay Bravo is drunk trading again. That's a no-no. And it should be interesting to see what the news articles on the Fed of why the market went up today. I'm telling you, it's because of this triangle. I've been waiting on this. Here, I'll measure this one for you. From here to here. I actually would probably want to pull it from here to here. But real TA would be there. Your price target, my actually price target is not, what is that, 432? 420. 420, right? Easy number to remember, right? That's actually the price target on that I took out whenever I took it out that day, whatever day that was on the January 23rd. And I wonder what the narrative is on the stock market. I had said that now that it's up, NASDAQ's up 3%. Oh, because they're raising rates. That gave consumer, whatever. I don't know. It's just so much easier to look at the charts, and always and forever, charts will predict what you will hear in the news. Now, Jeffrey Gundlach, he gets it because he understands the bond market. The bond market is what controls everything. Billionaire bond king Jeffrey Gundlach says the Fed will likely push back on the market's narrative that it will soon cut interest rates. Yes, the bond market is telling you that the Fed will follow the bond market. That means my little TLT play right there, that's the bond market. If you want to trade it, TLT. And I've been saying this since October of last year, and then definitely November. That is a double bottom. You go long, and my friends did, and they're doing very well. Hey, look, another symmetrical triangle. Which way it's going to break? It's going to break up. Shocker. Also, you guys must be so confused if you don't understand why I'm on CNN right now. Does CNN really still exist? You guys must be really confused at when I talk, because you just want to hear news, right? Just tell me the news. Okay, this is why the market goes up. Because the news said, right? That's not why the market goes up. It's not why it goes up or down. News does not make markets go up or down. Do you remember back in the day we had a president sit in the back of a motorcade and he died of, we'll just say it's lead poisoning, right on the scene? And then they said it was other people and all of that kind of. What did the market do after that? Did it go up or down? You would think you lose a sitting president. Pretty rad president too. You lose a sitting president. Market go up or down? Market actually went up. Hey, that week it was up. It was up that week. Wouldn't have believed that. U.S. consumers, and if I go back in the charts, I can show you why it went up, because of the lines. But you guys are wary. You guys are beat down, run down, exhausted. Why do I have to have 5 jobs, 6 jobs, 7 jobs? Well, that's because of the monetary system that you're in, which causes you to have to run harder and harder on the hamster wheel and then bring a family member because you can't do it, and then another one, and everyone has to get a job. You guys are wary of the economy. New survey shows. And I say, yes, especially if you're having to drive that. I would be wary too. That means you had too many kids and you shouldn't have. And I only know this from experience. Consumer confidence in the economy continues to waver despite easing inflation. And it's not just hard on you, it's hard on everyone. Companies. You actually have, and again, it's so wild because you're like, how is the market going up? I know, right? Kind of like when you were locked down. How could it possibly be going up? I know, right? Do you take advantage of it? No? Okay. You guys are going to be in that same fracking cycle. And I'm usually pretty darn right. Okay? I think market's going to go up, but then I think it's going to go down. And then guess what it's going to do after that? It's going to go up again. Please take advantage of it. Bankruptcy court gets busy. Us over here, sees most large bankruptcies at start of year, largest. Did it say large? Largest since 2010. So here we are now. See, 2010, great financial crisis. Oh, you wait. Here we are now. They are going to be a rolling. Not just that, the recession that we are apparently never going to be in, it's on its way. Okay? So don't worry. Santa Claus will come, destroy the markets. Everyone that is on the doom and gloom train, you'll be like, yeah, finally. But you're going to have to go through a lot of pain to the upside. I'm sorry. Just please take advantage. Dallas Fed shows factory activity. Those are the things that you make. That's what an economy is. It's where you make a product, right? You sell product. Let's just keep this going. Activity slumps for the 9th straight month. And if you want to see big picture, it looks kind of like this. This is 08. Factory. See, oh, everything's bad. Remember it was bad? 2015, 16. Oh, all right. Now I have to move my chart just so you can kind of see where we are currently at. Then I will move me. Remember, that was lockdown. Okay. No one could go anywhere or manufacture anything. So that's kind of a, all right. Here we are now, right? This is a slowdown, a recession. Fed is tightening in a recession. And the bond market is ripping higher, yields are crashing, and the Fed's like, let's raise rates. Even though it really doesn't even affect you because rates have been coming down. But what I can say is with these charts, take advantage. When this thing had, I don't know, what do you want? You want to make money just going down? Do you even know how to right click and short? If again, bear market course, 70% off. Take advantage of it. If you don't know how to do it, or when it goes up, right? Swing it up. You have to know when to get out. Like on when, and I don't know when it is with the gas, right? UNG on the daily, right? Oh, also, by the way, that head and shoulders still has not played out on UNG. So stop getting all excited. You got it. You enter after confirmation. You have no confirmation, and you actually have lower to go if it hits its price target. Well, we will see, and turn on the Bravo 9 and just do what I'm telling you to do. But just paper trading, right? Feels just as good. Only paper trading on the channel. But thank you guys for making it to the very end. I love you, and I will see you tomorrow.